There's one trading rule that probably saved me to become a profitable trader. I mean, I was an unprofitable trader for 2.5 years. I was blowing accounts over and over and over again. And finally, I implemented this one rule into my trading and it changed everything. Last week, I made over $11,000 trading. I'm only 17 years old and I trade 1 to 2 setups every single day. Last week, when I made over $11,000, I didn't trade for more than 1 hour every day. And you may ask, PB, how? It's simple. I don't trade in chop. Today, I'm sharing the single rule that transformed my entire approach to trading, and it's simple. If the stock is between pre-market high and pre-market low, there are no trades. 3 years ago, I was trading SPY options and I took 6 back-to-back scalps, back-to-back, all inside the same range. I was trying to buy, sell, buy, sell, buy, sell, and guess and hope a trend was gonna come and just hold forever when there was no momentum. I wasn't even timing the market. The result, I was down $4,000 before lunch and I took 6 trades in a day and I didn't have any more buying power left. That night, I was going through my journal and I noticed something shocking. All my losing trades had something in common and all my winning trades had something in common. All my losing trades were in between pre-market low and pre-market high, and all my winning trades were above pre-market high or under pre-market low. I was making a mistake. Why was I trying to scalp inside of this chop zone where the market makers feast on retail traders when I could just trade the trend and wait for it to break above pre-market high or pre-market low? The next day, I made a decision that changed everything. Here's the rule that I implemented. I don't take any trades in between the pre-market high and the pre-market low. So you may ask, PB, what are the pre-market high? What are the pre-market low? The pre-market high is the highest price meets from 9:30 a.m. market open till 4 a.m. So as you guys can see, this yellow shaded area is from 4 a.m. to 9:30 a.m. market open. This is the absolute high, which is why this is the pre-market high. And as you guys can see, I don't know how I typed that wrong, but this is the pre-market low. Reason being, this is the lowest time it got in the pre-market. We should actually move it a little bit right there. So this is the lowest point during the pre-market from 4 a.m. to 9:30. This is the highest point during the pre-market, as you could see. And you guys see how when we're in between the pre-market low and the pre-market high, we're just chopping, we're just ranging. But then what happens? When we get above the pre-market high, we rip. And think about it. Do you want to be trading in this chop zone, in this nasty chop zone, or do you want to wait for us to get above and look how clean this move is all the way up? So between the pre-market high and pre-market low is what I call the chop zone. Think about it. During pre-market, institutions set boundaries. They decide how high and how low the stocks are going to go before regular trading hours. Once those levels are established, one of 3 things are going to happen during the hours. Either price is going to break and close above the pre-market high, as we can see right here. Breaks above and closes above pre-market high and we rip. Price is gonna break below and close under pre-market low, as we can see right here. Under pre-market low, we dump. Or price is gonna chop in between pre-market high and pre-market low, as we can see here, chopping between pre-market high and pre-market low. Option 1 and 2 are where the money is made, but option 3 are where the accounts get blown. Here's how I apply this rule every single morning and how I trade with it. So every morning I mark the pre-market high and I mark the pre-market low of the stock. Now look what happens. So as we can see, we have our pre-market high, then we have our pre-market low, and then we get a 5-minute close under pre-market low. We don't do it on the break, wait for the close. So this candle right here, this is the first candle under pre-market low. This is an example as a downside trade. This is an example for my downside trade. I also like to add a VWAP to my chart, which is this yellow line. This is another confluence. So we get a 5-minute close under pre-market low. Now we're looking for a retest. So for example, what does this look like? Let me show you guys. Say this is the pre-market low. Just let's pretend we go under it and we get a retest. This is the retest, so where you enter puts then down. So as we could see, and this is the entry. So now let's look here. We go under it, we dip, we come up, we tap the pre-market low, and we tap the VWAP. This is where we're gonna buy puts. This is our confirmation for puts. It's on this retest. That is where we enter. There's no scalps, no FOMO trades, no feeling, none of that. This is our A+ setup, and this is telling us that we should take puts. For shorts, it's a retest of the pre-market low, and for longs, it's a retest of the pre-market high. As we could see, get above pre-market high, we come back, retest it, and then we rip. Simple as that. A 5-minute close above the pre-market high is our confirmation to look for a retest for calls, and a 5-minute close under our pre-market low is a confirmation to look for a retest for puts. I use VWAP as a second confirmation. If you have VWAP lined up with the pre-market high or lined up with the pre-market pre-market low, it's also a very good thing to look at. You ever want to buy puts over VWAP or calls under VWAP, because VWAP is the volume weighted average price, meaning it also moves with the trend. After I took that loss 3 years ago from trading in the drop zone, I applied this rule strictly. To this day, I remember taking those 6 back-to-back SPY trades in the back of my school classroom, and I was thinking to myself, what am I doing trading in the drop zone? Why am I doing this to myself? So I applied this rule strictly. Every single day I watch as prices opens in between the pre-market high and the pre-market low. The day after that $4,000 loss from trading in the chop zone, I applied this rule strictly. I watched this price open inside the pre-market high and pre-market low range, and for the first 15 minutes, I did absolutely nothing while others were getting chopped out. Then finally, the price broke above the pre-market high and closed above it on the 5-minute candle. Then we got a retest. It confirmed with VWAP, and I entered my position. The result was insane. I made $7,000 before my 3rd class in school even started. And crazy part is, I was on the charts for like 30 minutes from 9:30 to 10, and I made $7,000, double my loss from one trade. So I lost over and over and over again, $4,000 on 6 trades. And then that one winning trade when I traded the trend made me $7,000. By trading outside the chop zone that day, I made a promise to myself I would never do it. And I reduced my average trades from 10 plus to 1 to 2 per day. I increased my win rate from 50% to over 70%. I more than doubled my average profit per trade. And most importantly, I gained confidence in my system. I gained confidence in myself. Just really quick, I want to go over VWAP. As you guys can see, VWAP is this yellow line, and I like to use it for confirmation as well as a very good thing to use for confirmation. It's an indicator, and here are my settings for VWAP. Show you. If you want to copy it, whatever you want to do. If we are above VWAP, it is a bullish sign, so it's very good. You always want to be above VWAP. If VWAP is lined up with the pre-market high, then it's also very good. So you see how right here in this pre-market high retest, if VWAP is lined up with it, that's 2 confluences, that's more confirmation. Or in this pre-market low retest, you see how it's a VWAP retest and a pre-market low retest. That is even more confluence for your puts. So VWAP is like another thing you like to use for the trend. And if your VWAP is under the pre-market low, then you could trade a VWAP retest, because it's going to be hard to get all the way back up the pre-market low, so you trade VWAP retest. Same thing if it's above pre-market high. So for example, above pre-market high, you could trade VWAP retests. When you get a close above pre-market high and you see VWAP supporting it, it just gives you more confidence that the move is strong and that institutional money is behind it. When you get a break under pre-market low, you want to see the same exact thing, and when pre-market low is lined up with VWAP, that is where the money clicks. The more confluences you have, the better. The pre-market levels and the VWAP align, that's where your juiciest setups are going to be. Now guys, here are 3 killer mistakes that you do not want to do when trading. You don't want to take these boredom trades when you're in between pre-market high and pre-market low. You don't want to take trades when you don't get a retest. So for example, you see a huge move down on Google, you get mad, you don't see any retest, you buy puts at the bottom, and then next thing you know, you're dead. Number 3 is ignoring the market context. So for example, like we could go to ARM today. You don't want to buy puts on ARM because it's down when the whole market's green. No, you want to trade the trend of the market. You want to be in the same side as the market. So SPY and QQQ. Let me show you guys one of the trades I took today. Today I took 2 trades and I made over $6,000. On Hood, what happened? We marked my pre-market high. We get a 5-minute close above pre-market high. Then we get a retest. I took this retest. I sold at high day for around 60%. And then I got out some more here. And then we came down and retested pre-market high. All I did was retest pre-market high, so it was fine. But we are under VWAP, so what I did was I wait for it to get above VWAP. So now you retest the pre-market high and you reclaim VWAP. I entered more calls here and I made over 160%. My target was 54 as well, so let's do the math. So we have a pre-market high retest. My stop was going to be probably a 5-minute close if we were under, and my target was 54. Insane trade, but all I did was mark the pre-market high. We got a pre-market high retest. We reclaimed VWAP. I took calls and we crushed it. Let me show you guys an example of an extremely A+ example. So we mark our pre-market high, we mark our pre-market low. Now what happens? We get a 5-minute close above pre-market high here. So what are we looking for? A retest. VWAP's above as well, so it would be a double confluence. You're gonna get a retest of VWAP and the pre-market high. What happens? We get a retest of VWAP and the pre-market high. We take calls. And next thing you know, in the next candle, we go all the way to high day. I made over $4,000 in 1 minute on this setup, literally because I entered calls in the retest. Next thing you know, it ripped. I'm not saying this happens every time, but it does happen. And you can proof is literally in this trade. It was a pretty sick trade right off the pre-market high retest. Stop loss was a 5-minute close under. And as you can see, I'm not making this stuff up. I also made a whole trade recap on this exact trade that I took, showing proof as well. All I do is I mark the pre-market high, I wait for a 5-minute close above. When I get a retest, I enter. My stop loss is if we get under it, and my take profit is a high a day. I close the trade. I'm done for the day. I don't overtrade nothing. One trade a day can change your life, and that's what I focus on. This will completely change how I approach the market. Instead of sitting at the computer all day looking for setups, I just mark my pre-market high and pre-market low levels. I wait for a clear break, close, and retest outside of those levels. I take one setup a day. I trade for 1 hour a day, and then I close my computer and enjoy the rest of the day. Best part is, if I don't see a trade one day, I don't have to trade. Like, that's it. You wait for A+ setups. What I found is that the best trades happen when you have discipline. The best trades are happening when you're not even necessarily, you don't care to trade. They just come to you. By staying outside of the chop zone, you're automatically cutting out so many bad trades. So stick to trading the trend. It's also going to help you because you're going to enter trades that are going to move faster because they're already breaking out. Here's an exact action plan so you can implement this rule starting tomorrow. We're going to mark your pre-market high and pre-market low. You want to stay patient when the market opens, meaning no trades until price closes outside the range in a 5-minute, and use this time to plan your potential entries. When you're marking the pre-market high and pre-market low, just remember it's from 4 a.m. to 9:30. Number 3 is add VWAP to your charts. Number 4 is going to wait for the retest. We don't enter in the break and close. We enter on the retest mostly. And number 5 is make sure you execute with risk management. This doesn't work all the time. Anybody who tells you they have a 100% win rate is a liar. But when you lose a lot less than when you win. So your risk reward is there, but you have to have strict risk management. Try this for just 1 month and see if your trading transforms. The biggest difference between amateur and professional traders isn't their strategies, isn't how smart they are, isn't any gift. It's their patience. Amateurs take 20 trades hoping to win a couple, when professionals take 2 trades and avoid the other 18. The pre-market high and pre-market low rule literally forces you only to take A+ setups. It forces you. It makes you wait for the market to show you its hand before you commit your capital. And what I've learned as a 17-year-old trader is the market will always be there. There's no rush. There will always be another setup. Missing a trade is infinitely better than taking a bad one, or missing a trade because you didn't get your exact entry. You know how many times there are where I don't get an exact retest and I don't take a trade? I'm okay with it. Now look, here's your challenge. For the next 5 trading days, follow this rule strictly. Mark your pre-market high and pre-market low, and don't take a single trade inside that range. I really think you'll see an improvement in your trading. If you want to learn more, make sure you subscribe. I hope you enjoyed this video. I'm dropping tons of more content on my YouTube. I also have a free trading Discord if you want to join. Link is below. And I hope to see you guys. Comment any questions, subscribe, like. Peace.